Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Tuesday, the 3rd of May. And so a decent selection today, most of it backing the idea that at least sometimes the charting works. You can see that from ARC Minerals, where we had that trend line break there back in the beginning of last month, around 3.6 pence. And shares up at 5.2 with a breakout through 4.5 pence resistance. That was February and April resistance above 4.5. We're looking for progress towards that July resistance line projection as high as 6.5 pence, hopefully by the end of this month. So pretty good there. And also we've had that uptrend line in the RSI window, which also drove the shares higher. Interesting to note now that we've got both the 50 and 200-day moving averages rising. That's the equivalent of a golden cross, and the run up to, or while we're in that, and the run up to such an event tends to be the strongest part in the cycle. Let's see if ARC can come up with the goods. Another stock which has come up with the goods after a slow start is Borders and Southern. In fact, here we've got the happy scenario of the shares actually breaking or beating our resistance line projection there at around 5.1 pence. Sometimes people sort of ask where I get my lines from, and politely, I suppose that comes from the chart. But here you can see that, in fact, we could actually have had a higher resistance line there with the peak there from back in the January last year. That might allow us to stretch the near-term target up to 6 pence over the next week or two. Upside valid certainly while we're above the old March peak at 4 pence, above 4 pence. Bulls of the stock can hopefully run the position a little bit higher, at least 6 to 6.5 pence over the near term. Rather more obscure situation coming in the form of Boston International, but even this has worked in terms of the charting. So we bounced off the floor of that broadening triangle from October. We had bullish divergence, which was the RSI divergence, which was the reason for including the stock in the selection, even though it's very liquid. And we're looking for 1.8 pence by the end of next month. An end of day close above the 50-day moving average at 1.16 should be the latest trigger for a move to the upside. This stage only well below a penny, which is recent support, delays the upside scenario. On to chill brands, where the bun fight continues between the Allies and the Axis powers. Here we had a falling RSI divergence line, which the shares bounced off, and that sort of started the beginning of the rally that we had, or the attempted rally that we had in March and early April. Obviously, the placing knocked the stuffing out of the shares. But so far, we're remaining above that support line there from March at 2.5 pence. And while we're above that, there's still the chance of a move up to 4.5 pence or 5 pence to fill the gap from the end of last month. If you're cautious on the stock or a bit squeamish, then you'd wait for an end of day close back above the late March support at 3.75 pence before targeting 4.5 or 5 pence. But obviously the situation still slightly fraught in terms of the bull argument. Moving on to Clontarf, which there's been no problems at all in the recent past. We hit our target there at 0.37, which was the top of a broadening August triangle. We've now got the 50 and 200-day moving averages rising, the 200-day line just tipping up there now in the last couple of days. And that suggests that we should at least hit the other target. We had the higher target, the optimistic target at 0.57 over the next week or two. Certainly while we're above 0.4 or the upper 30s, looking for 0.55 plus on Clontarf over the near term. Stock which I looked at a bit late, but just wanted to sort of try and be sure of its credentials, was Card Factory. Here we've got another situation where the shares have got a newly rising 200-day line. We've got an unfilled gap to the upside, never needed to test the top of that gap at 51 pence, and have actually found support at the 200-day line at 54. Looking for the initial target there at 70 pence, which hopefully will be hit over the next week or so. Next target above that, a rather ambitious sounding target up to 85 pence at that October resistance line projection. But at the moment, we're looking pretty strong, and this bull flag that we've had, the bull flag breakout, looks like a mid-move consolidation. Therefore, 85 pence, maybe as soon as the end of this month, could be on the cards for Card Factory, pun intended. On to Deltic, which is stock which is starting to look more encouraging now after the pullback that we had from 3.6 pence. Bounced off that major support line there from June last year, around 2.25, and above that we're looking for not only a retest of March resistance, the 3.6, but actually a very optimistic target, a broadening triangle target as high as 6.5 pence, maybe by the end of June. If you're cautious about the credentials here, then you wait for an end of day close above that resistance line there from March. That's around 3 pence, and above 3 pence, obviously 3.6, and then best case scenario target at 6.5. That is obviously rather optimistic, but even 3.6 again would be quite nice given where we are at the moment. Few fans in East Star Resources I've seen on Twitter, and here we've got an upgrade to the previous target, which was around 6 pence, I think. Broadening triangle target here up to 7 pence. The shares behaving very well at the moment, so holding above that February peak at 5.3 pence. The longer we stay above that, the greater the chance of a move to 7 pence. The other positive here is the way that we've had an unfilled gap to the upside. Never had any chance of being filled, which is very, very positive. In fact, we broke the high of that gap up day the day after. And to add icing on the cake, we've got the 200-day moving average now rising. That should provide momentum, given that we're in the run-up to a golden cross maybe over the next week or two. So 7 pence looks relatively easy to achieve by the end of this month. Waiting game has certainly been in place for holders of Emmerson. It does show that sometimes you do have to be very patient. Nice to see the shares on Friday break the, hit our initial 9 pence target. Above 9 pence, we're looking for a broader target, which is the top of a July 2018 price channel as high as 14 pence. If I just adjust that a little bit, that's 14 pence. And maybe we could see that as soon as the end of this month, or at least by the end of June. But holding 9 pence should be pretty strong for Emmerson up towards 14 over the near term. Another stock which came out its shell and started to flourish has been Nostra. Here we started off the rally with a gap to the upside that was filled, but had another gap there at the end of March, which has not been filled, and that's pretty impressive. And really finding support above the 50-day moving average, currently at 0.5, and added plus as well. Looking for that August resistance line projection to hit, or the shares to hit 0.85 over the near term, hopefully as soon as the end of this month. And really, while we're above 0.6, looking for 0.85 quite comfortably on Nostra. Moving along to SDX, which I think had some news today. Here you can see we've got a couple of our favorite charting and technical features on offer. We had a bear trap, brief bear trap at the beginning of last month below the December floor at 7.5 pence. Unfilled gap to the upside, which has never been close to being filled, and then a sideways shuffle along the 50-day moving average before a move to the upside today. That suggests that the share should easily hit the 11 pence resistance line there from October, and all of this is backed up by a bullish divergence line from back in December. So plenty of momentum there for SDX and plenty of recovery momentum there for SDX at the moment, and that gap there very, very healthy indeed from a technical perspective. Stock which has been healthy from a technical perspective for months now is Southern Energy, and here you can see that we've got a rising trend channel that's been in place since December. We had that brief bear trap below 20 pence, and that was the starting gun for the rally. Gap to the upside there, that sideways shuffle that we've seen in SDX, a longer one than SDX, but that's worked very well for Southern, and it looks as though we're going to hit or head towards the top of that rising January trend channel at 70 pence, perhaps as soon as the end of this month. Finishing off with Woodbois, which had a bit of a flurry last week and the week before. Here we've broken out of that mid-move, or that bull flag that we had, which its peak was at 6.1 pence, above 6.1. We're looking for the top of the channel at 9 pence, which is what I suggested before. Added sizzle here comes from the way that we've got the 50 and 200-day moving averages both rising now. The run up to a golden cross, hopefully a week away, is traditionally the strongest part in the cycle, and Woodbois looks like it's living up to that particular reputation for the golden cross run up. So healthy situation there, especially while we're above 6 pence. Only really well below the floor of that flag, 5.3, delaying the upside scenario. That's it from me today. More updates tomorrow.